It's great to have you with us on Full View on SABC News. Time for the number of the day, and let's bring it up. It's important data relating to South African factories. Of course, a lot of jobs created or lost there, 1.6%. And the manufacturing sector continues to show sign of strain. Data from Stats SA show that the sector grew by 1.6% in November compared to the same month from the previous year. But that is much slower than the 2.8% growth that we saw in October. Economists had expected manufacturing production to have increased at least by 2% year on year, but this is significantly lower than that. The largest positive contributors were food and beverages, motor vehicles still selling parts and accessories. SABC says a noteworthy negative contribution, though, was from iron and steel, other metal products and machinery sales as well. The ABSA Purchasing Managers Index gauging the health of the sector rose to above the neutral 50 points mark in December, signaling growth in the sector. So maybe things are starting to look up in December, but performance of the sector expected to be affected by the global economy. Some slowdown there. Economists also say the sector could be impacted negatively should Eskom embark on load shedding again. Our reporter Gloria Sefako Musi has more on manufacturing.
Factors depressing demand for goods include the slowing global economic growth on the back of trade tensions between the world's superpowers. Local demand is also weak. Even though the economy emerged from a recession in the third quarter of last year, economic activity remains weak. The sector has endured several headwinds, including high energy costs and unreliable supply, as well as the volatile currency exchange rate.
Weak demand is a challenge that we've been seeing for quite some time with our manufacturers. And then on the input sides, that can vary from time to time, but at the moment energy is a very large input for most of our manufacturers, and reliable energy supply from a supply point of view as well as a cost point of view and cost increase point of view is quite a challenge that our manufacturers are facing at the moment. And that really also talks to wider issues as far as infrastructure is concerned.
The weaker than expected manufacturing production data will likely translate to weaker GDP growth.
But if we look at the data that we have available, it points towards the manufacturing sector depressing GDP growth in the fourth quarter. Overall, we're expecting GDP growth on a quarter-on-quarter basis to decline in the fourth quarter, and economic growth as a whole for 2018 to come in at around 0.7%.
The challenges of high input costs and the slowing global economy are expected to constrain growth in the sector going forward. Gloria Sefako Musi, SABC News, Johannesburg.